A lot of investors have lost patience with Microsoft stock, calling it dead money. Not Good Haven fund manager Keith Trauner.
Microsoft's a company that has a ton of cash, about $3 net on its balance sheet, generates a ton of cash, is number one in a whole bunch of businesses that create a lot of cash, and it's reacting right now to headlines about the phone business and the tablet business, both of which are not core to what they do.
You also own Hewlett-Packard in your portfolio. Clearly, they have been in the news with lots of problems at the top. If there's anyone at the top right now, tell me why you want to own a company in flux.
Yeah, it's fascinating. You've got a tremendous soap opera at the board level, and yet in their businesses, they're number one in servers coming out of a long competitive period. They're number one in PCs. They have a number one printer position, and they're big in services. They have very valuable businesses and assets, and we don't have the baggage of having been there for the first three or four disappointments. And the price is now so low that even if earnings come down a bit, as we expect, or they have to spend more on R&D, which we expect, the price is still giving you about a 15% yield on your purchase price.
People are running from financial stocks right now. Yet you're in Walter Investment Management. Tell me what's the motive for holding this one?
Yeah, we have no religious aversion to owning financials, but we want to be able to get our arms around things like contingent liabilities. And if we can't, we just don't want to go there. Walter is a business that benefits from helping government enterprises and the banks with all of the problems that they have today. They're a special servicer of mortgage loans, which means they help collect and realize the value of loans on behalf of other institutions. Given the supply of troubled properties today, we think they can double their assets under management in the next 6 months, just from what's out there, which we think is going to possibly double earnings in the company.
The Good Haven Fund also owns Berkshire Hathaway, and Trauner says he is just fine with Warren Buffett's recent decision to buy back stock.
You know, Berkshire is a company we followed for at least 2 decades. We know it extremely well. It's not going to grow as fast as it did in the past, but it's a collection of wonderful businesses, possibly the best insurance companies in the United States. And we bought a slug of it very close to book value. And at that price, we think we'll earn a good return on our money. The fact that Buffett came in afterwards to buy back shares tells us, just validates our thinking.